This is the Net Group Investments Insights Podcast, where one or more of our experts explore a variety of views and insights that investors care about.
Hello, I'm Trevor Garvin from Net Group Investments Multi-Manager. Welcome to this week's market and economic wrap entitled Hopes Rise on Middle East Peace Deal Whilst Turmoil in French Politics Reigns. As always, there's been much activity across the globe on several fronts. France is currently grappling with a deepening political crisis following the abrupt resignation of Prime Minister Sébastien Lecornu yesterday, just 27 days after taking office. Lecornu stepped down less than 24 hours after announcing his new cabinet. His resignation marks the fifth time in 2 years that France has seen a change in Prime Minister, underscoring the country's ongoing political instability. President Macron now faces mounting pressure to either call new elections or resign, as critics argue that his centrist coalition has lost its mandate to govern. The ongoing crisis in the Middle East also continues, with negotiations currently underway in Egypt between various negotiators from Israel, Hamas, and several other Middle Eastern countries, all with the United States. A peace deal has been proposed by the Trump administration, setting out a 21-point plan that will bring an end to the conflict. We hope an agreement can be reached. The Springboks pulled off a nail-biting victory over Argentina on Saturday at Twickenham in London to win the Rugby Championships for the second year running, a four-way competition between South Africa, Argentina, Australia and New Zealand. We also watch with interest the ICC Women's World Cup cricket tournament that has just started in India and Sri Lanka, and hope the Protea women's cricket team can have a successful run. Turning to the investment markets, the rand is marginally firmer at 17.21 Rand to the dollar this morning, from 17.29 on Thursday last week, as the US dollar holds its ground amid the US federal government shutdown. The dollar has shown resilience, reflecting market expectations that the impasse over the federal government funding will be short-lived. In equities, the JSE All-Share Index rose, recording its seventh consecutive monthly gain, largely driven by precious metals. The JSE All-Share Index was up 2.34% for the week, with basic materials driven by gold mining shares up 3.6%, whilst financials were down 1.4%. US stocks have also shrugged off the likely negative impact of the government shutdown, with market players focusing on improving earnings prospects. The Nasdaq up 1.6% and the S&P 500 up 1.1% continue to climb, reaching new highs on optimism surrounding potential Federal Reserve rate cuts and strong corporate earnings momentum. European stocks broadly hit record highs, driven by gains in technology and chip makers, as well as positive spillover from the US equity rally. The German DAX was buoyed by strong demand for industrial and technology exports, with the DAX up 3% for the week. The UK FTSE was slightly weaker due to domestic economic pressures, whilst the Nikkei bucked the trend, losing further ground over the past week. In the bond market, the yield on the South African 10-year bond is trading at 9.2%, and the benchmark US 10-year bond at a yield of 4.19%, reflecting expectations that the government shutdown will be resolved speedily. In commodities, the Brent crude oil price fell this week, recording its steepest weekly decline since the third week of June over concerns about oversupply as well as demand worries. The price slipped to around $66 per barrel by the end of last week. Finally, gold surged yesterday to above $3,900 an ounce for the first time ever, driven by safe haven status on the back of US rate cuts and a weaker dollar. This record price is what has been driving up South African gold mining stocks. That brings us to the end of this week's market wrap. Till next time, with thanks, Trevor.
This podcast is for marketing purposes only. The information contained in the podcast or video was for information purposes and does not constitute advice, recommendation, or an offer or solicitation to purchase or sell any funds or strategies to any person in any jurisdiction in which the offer, recommendation, or solicitation to purchase would be unlawful.